Picture this. The bustling port of Amsterdam in 1602, merchants shout deals, ships laden with exotic goods prepare to set sail, and a palpable sense of anticipation hangs in the air. Investors gather, their eyes alight with a mix of hope and trepidation. They've pooled their resources, investing in a voyage to the distant East Indies, a land promising untold riches. Their fate and their fortunes are tied to the success of this risky venture. What these early investors were pioneering was a revolutionary concept, a way to share risk and reward, a system that would evolve into the stock market we know today. The seeds of the stock market were sown in the coffee houses of Amsterdam, where investors, fueled by caffeine and ambition, gathered to trade shares in the Dutch East India Company. This innovative company, a precursor to modern corporations, allowed individuals to own a piece of its vast trading operations, sharing in both the risks and rewards of its voyages. This novel concept of shared ownership, represented by tradable shares, quickly took root. It wasn't long before the idea crossed the Atlantic, taking hold in the bustling coffee houses and trading floors of New York City. What began as a way to finance risky voyages transformed into a powerful engine driving economic growth, funding industries, and shaping the destinies of nations. Today, the stock market is more accessible than ever before. With the rise of online trading platforms and a wealth of information at our fingertips, anyone can participate in this exciting world. But with this accessibility comes a responsibility to understand the forces at play. We'll unravel the jargon, decode the complexities, and empower you to make informed decisions about your financial future. Whether you're looking to invest your savings, understand the financial news, or simply satisfy your curiosity, we invite you to join us as we explore the fascinating history and inner workings of the stock market. Our story begins not on Wall Street but amidst the bustling wharves and vibrant merchant houses of 17th century Amsterdam. The Dutch, renowned for their seafaring prowess and entrepreneurial spirit, were at the forefront of a global trade boom. It was an era of exploration, of exotic spices flowing from the East Indies, and of fortunes to be made and lost on the high seas. Financing these long and perilous voyages to the East Indies required significant capital, far exceeding the means of any single merchant. To meet this challenge, a revolutionary concept emerged, the joint stock company. In 1602, the Dutch East India Company, or VOC, was formed, laying the groundwork for the modern stock market. The VOC solution was as brilliant as it was groundbreaking: divide ownership of the company into shares and offer these shares to the public. These shares, known as actions, represented a fraction of ownership in the company and entitled the holder to a portion of its profits, if the voyages were successful. This marked the birth of shareholder capitalism. For the first time, ordinary investors, from wealthy merchants to skilled artisans, could participate in the potentially lucrative East Indies trade. They could share in the risks and rewards of global commerce, fueling the VOC's expansion and laying the foundation for a new era of economic development. The stage was set for the creation of the world's first formal stock exchange. In the heart of Amsterdam, a bustling hub of commerce and trade, a new type of marketplace emerged: the Amsterdam Stock Exchange. It wasn't a grand edifice, but rather a network of coffee houses and meeting places where merchants, investors, and speculators converged to buy and sell shares in the VOC and other emerging companies. These early stock traders, fueled by caffeine and the thrill of the deal, laid the groundwork for the modern trading floor. They developed rudimentary trading practices, negotiated prices, and spread information, often through whispered rumors, about the latest voyages and the prospects of far-off markets. The Amsterdam Exchange, though informal by today's standards, established key principles that continue to underpin stock markets worldwide. The early stock market was not without its turbulence. The inherent risks of seafaring, coupled with the volatile nature of early market speculation, led to periods of boom and bust. Fortunes were won and lost, and the nascent market faced its share of scandals and manipulation. However, from these early, often chaotic beginnings, a powerful financial system emerged. one that would fuel global trade, drive innovation, and shape the modern world. The legacy of the Dutch East India Company and the Amsterdam Stock Exchange extends far beyond the canals and merchant houses of 17th-century Holland. From coffee houses to buttonwood, the New York Exchange takes root. The stock market, born in the coffee houses of Amsterdam, found fertile ground in the burgeoning financial center of New York City. In the spring of 1792, under the shade of a buttonwood tree on Wall Street, a group of 24 stockbrokers gathered to forge an agreement that would shape the future of American finance. This simple agreement, known as the Buttonwood Agreement, established the rules and regulations for trading securities, laying the foundation for what would become the New York Stock Exchange, or NYSE. The early NYSE was a far cry from the bustling trading floor it is today. However, it provided a crucial platform for raising capital, enabling the young nation to finance its westward expansion, canal construction, and burgeoning industrial sector. The Industrial Revolution fueling a financial revolution. The 19th century witnessed an unprecedented wave of technological innovation, transforming economies and societies across the globe. The Industrial Revolution, powered by steam engines, railroads, and mass production, created vast new industries and fueled an insatiable demand for capital. The stock market proved to be the ideal mechanism to finance this industrial boom. Companies, eager to expand their operations and capitalize on new technologies, turned to the stock market to raise capital by issuing shares. The stock market became synonymous with progress, innovation, and the transformative power of industry. The Roaring Twenties and the crash of '29. A cautionary tale. The stock market's meteoric rise in the early 20th century, fueled by post-war optimism and technological advancements, culminated in the exuberance of the Roaring Twenties. A surging economy driven by consumer spending and speculation led to a stock market bubble, with prices soaring to unsustainable levels. Investors, caught up in the speculative frenzy, borrowed heavily to buy stocks, convinced that the market would continue its upward climb indefinitely. However, this unchecked speculation and overvaluation of assets created a house of cards, poised for a dramatic collapse. In October 1929, the bubble burst, wiping out billions of dollars in wealth and ushering in the Great Depression. Regulation and resilience, shaping a modern market. The stock market crash of 1929 exposed critical weaknesses in the financial system, leading to calls for greater regulation and oversight. In the aftermath of the crash, the United States government implemented a series of reforms aimed at restoring investor confidence and preventing future crises. The Securities Act of 1933 and the Securities Exchange Act of 1934 established the Securities and Exchange Commission, or SEC, a powerful regulatory body tasked with protecting investors, maintaining fair and orderly markets, and ensuring the transparency of financial reporting. These reforms helped to create a more stable and trustworthy financial system, paving the way for decades of economic growth and expansion. A market of ownership, buying a slice of the pie. Imagine walking into a bustling marketplace not with fruits and vegetables on display, but with pieces of your favorite companies up for grabs. That's essentially what the stock market is. A vast, dynamic marketplace where ownership of companies is bought and sold in the form of stocks. When you buy a stock, you're not just buying a piece of paper. You're acquiring a small ownership stake in that company. As a shareholder, you participate in the company's success. If the company profits, so do you, usually through dividends or stock price appreciation. Every day, millions of investors make decisions about which companies they believe in and are willing to invest in, creating a constantly shifting landscape of prices and valuations. The dance of supply and demand, how prices take shape. The stock market, at its core, operates on the fundamental principles of supply and demand. Just like that rare collectible you've been eyeing, the price of a stock goes up when demand exceeds supply and falls when there are more sellers than buyers. Let's say a tech company unveils a groundbreaking new product that sends ripples through the market. Investors, excited about its potential, rush to buy its stock, driving up demand. Conversely, if a company faces setbacks, such as disappointing earnings or negative news, investors might sell their shares, increasing supply and causing the price to drop. Indices, keeping score of the market's game. Imagine trying to follow a sports league with hundreds of teams but no scoreboard to keep track of the overall performance. That's where stock market indices come in. They act as benchmarks, providing a snapshot of how the market, or a specific segment of it, is performing. Some of the most widely recognized indices include the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite. These indices help investors gauge market sentiment, compare their portfolio performance, and make more informed investment decisions. Beyond the buzzwords understanding stocks, bonds, and funds, navigating the world of investing requires a basic understanding of the different asset classes, each with risks and potential rewards. Stocks represent ownership in a company, while bonds are like loans you give to a company or government. Mutual funds and exchange-traded funds, or ETFs, offer a way to diversify your investments by pooling money from multiple investors to invest in a basket of assets. Understanding these different asset classes is essential for building a well-rounded investment portfolio that aligns with your financial goals and risk tolerance. Beyond Wall Street, the stock market, and your financial well-being. The stock market is often portrayed as a high-stakes arena for financial wizards and Wall Street tycoons, but its impact extends far beyond the trading floors and into the lives of everyday individuals. It's not just about making millions overnight, it's about securing your financial future, achieving your dreams, and building a life of financial security and independence. Whether you're saving for retirement, your child's education, or that dream home, the stock market offers a powerful tool to grow your wealth over time. It's not about gambling or trying to time the market, it's about participating in the long-term growth potential of the global economy. Think of the stock market as an engine for wealth creation, a vehicle that allows you to put your money to work, earning returns that outpace inflation and grow your savings exponentially. It's about taking ownership of your financial future and participating in the success of innovative companies in a dynamic global economy. The stock market's power of compounding is often dubbed the eighth wonder of the world. Compounding is earning returns on your returns, creating a cycle of growth. Small, consistent investments can grow exponentially over time. The earlier you start, the more time your money has to grow. Weathering the storms, navigating risk and volatility in the market. The stock market offers growth potential but comes with risks. It's a dynamic environment influenced by many factors. Understanding risk and a long-term perspective are essential. The market operates in cycles of growth and contraction. Like a ship in a storm, stay focused on long-term goals. Diversification mitigates risk by spreading investments. Don't put all your eggs in one basket. Investing is a marathon, not a sprint. Patience and discipline lead to financial success. The digital age of investing, from Wall Street to your smartphone. The stock market, once exclusive to Wall Street, has transformed in the digital age. Today, anyone with a smartphone can trade stocks thanks to online platforms. Apps like Robinhood and E-Trade have democratized investing. This accessibility empowers new investors but also presents challenges. The ease of access can lead to impulsive decisions. It's crucial to remember the stock market's fundamental principles. AI and algorithmic trading now play a significant role. Cryptocurrencies like Bitcoin challenge traditional finance. The modern market is dynamic, shaped by technology and new assets. Innovations present opportunities but require informed decision-making. From Dutch canals to global networks, the enduring legacy of the stock market. Our journey began on the bustling docks of 17th-century Amsterdam, where the seeds of a financial revolution were sown. From informal coffeehouse gatherings to today's electronic exchanges, the stock market has evolved into a global force. The Dutch East India Company's innovative financing laid the groundwork for shareholder capitalism. The Buttonwood Agreement marked the birth of the New York Stock Exchange, a cornerstone of American finance. The Industrial Revolution, fueled by the stock market, ushered in unprecedented technological advancement. The Roaring Twenties highlighted the market's volatility and the need for prudent regulation. Through boom and bust, war and peace, the stock market has shown remarkable resilience. Technological leaps have made the market more efficient, accessible, and interconnected. Embrace the stock market's opportunities. Your journey begins now. The stock market is now accessible to anyone with an internet connection. Online platforms and fractional shares empower new investors. Approach with a balanced perspective, acknowledging risks and rewards. Investing is a marathon, not a sprint. Patience, discipline, and strategy are key. Educate yourself and define your financial objectives. Diversify your portfolio to mitigate risk. The stock market reflects human ingenuity and ambition. Understand its history and potential impact on your life. The future of finance is in your hands. Please like and subscribe for more weekly content.